For 4,000 years, an ounce of gold bought a fine man's suit. Fine man's suit today on Savile Row, about $1,500. That's where gold should be, probably going there. Gold has made a huge bottom. That's a very nice technical. So it made a huge bottom, ended the year in turmoil, and now has surged. And here's why. China has quietly become the largest gold market in the world. Okay? Largest gold market in the world. They are buying gold like it's going out of style, because it does go out of style because it's hard to produce. Right? All the gold in the world fits in 2 Olympic-sized swimming pools.
I think you focus on hard assets. As I said in my talk, the enemy is cash. Cash is what they're going to ultimately dilute, use to print. They're going to retire debt. They're going to expunge debt. They're going to inflate away debt. That's what these central banks are going to do. That's the only logical outcome. You can't print a bar of gold, you can't print a building, and you can't print a share of equity capital.
I think gold is underappreciated as a currency. I think that you're going to see a huge shift to gold amongst retail as well as institutional. I think you heard it earlier today that you've got a lot of central banks, especially in the emerging markets, that are moving to gold. In today's environment, gold makes more sense than it did 6 or 12 months ago. And for that reason, I think you'll see gold in favor. I think you'll see a lot of buying, a lot of accumulation of gold right now.
Especially the dollar exchange rate seems to be the one variable that commands market action these days. But to me, the underlying fundamental consideration is the fact that, as I see it, that the price of gold is the reciprocal of the world's faith in the institution of managed currencies. When I say that gold is an investment, it's not a hedge. It's not a hedge against monetary confusion. It is investment in monetary confusion.
Gold is the ultimate currency. I couldn't agree with Jim more. And if we get into the thing that Grant describes, you better have some, and you better have a way to get more.
I don't buy gold at 1,100 because I think it's going to go to 1,200. I buy it for what it does, not what the price is. The price is the last consideration for me.
I think is probably the biggest development that people aren't talking about is on April 24th, the Chinese mercantile exchange now will price gold in renminbi. That is a huge development, monster development.
As I'm thinking through this process, because this is part of my book, The Age of Transformation, as I'm thinking, how will the world change over the next 20 years? It's not just cool new technology, it's economics and geopolitics and generational change and demographics. So as you begin to think through that, I'm going, I think I probably want to increase my allocation to gold.
Don't buy gold until you read this in-depth guide on buying precious metals. Click on the link in the description below now for instant access.